Okay, everybody, let's do the walkthrough for chapter 3. And so for each of these chapters, the first step is always to just walk through the steps that are laid out in the chapter. So I go to the chapter, and the chapter always starts with the learning outcomes. And when I click on the next page, there'll be an overview, and the next page will start to give me steps to do. And so the walkthrough is really just following the steps in the chapter in your Wild Water Sports Company. Remember, the Wild Water Sports Company is kind of a practice company. And so your grade for these walkthroughs is not based on getting everything right. It's just about going through it, familiarizing yourself. And then when you do at the end of the chapter, we will do um, a case company, and that's where you'll be graded on sort of your ability to do things correctly. So the walkthrough is just the learning, and then the case is sort of I won't call it a test. That sounds too scary, but the demonstrating what you learned at the end of each chapter. So I'm going to take you through this walkthrough, and so I'm in the company settings page of chapter 3, and it says to modify Wild Water Sports company settings, do the following. Open your internet browser. It's already open. Go to your account or to your QuickBooks company. I'm already there. So I'm I am going down to step 3 from the Wild Water Sports company homepage. Click the gear icon. And then we're going to go to account and settings. It always takes a little bit to load. And then in step 4, it says the first screen, the Wild Water Sports Company information. This is where you'll change your companies. So step 5, click the pencil icon in the company type section. So I'll do that. Um, and it says type store retailer into the industry text box. So store retailer. And then we're going to choose all other miscellaneous store retailers, and then accept tobacco stores. And we'll hit save. So that was step 6. Step 7, click the pencil icon next to the company name section. We're going to enter our EIN, which is our employer identification number, which is 99-685-4102. Hit save, which is step 8. Step 9, we're going to view the sales, expenses, and payments, time, and advance tabs just to see the default. So they're really just wanting us to see what other settings we could have. Again, there's opportunities to buy other QuickBooks services. And again, you would think about how you might use those in your business if you wanted to be able to receive credit card payments through QuickBooks. Sales, we can see, for example, that our invoice terms are net 30. And again, so we're just looking at all the different things that we could do in here, but we're not changing any of them right now. So that's the end. That's step 9. So we're going to turn the page over now to modifying the chart of account and establish beginning balances. So we're going to actually start putting some data into our account. There's a pretty good intro that's worth reading there if you haven't already. But I'm going to go back to our home page here. I'm going to click the gear icon. So I'm on step 1 of to add a new checking account to the chart of accounts and establish a beginning balance. Do the following. So I click the gear icon and I click chart of accounts. The chart of accounts just shows all the accounts we have. You can see all of our accounts have 0 balances because we're brand new. And so that's how we're set up. So we're going to click the new button. And this is our first, not our first, we saw it a lot actually in chapter 2, but this is an area where the figure in the textbook looks really different than what we're seeing on QuickBooks because Intuit updated the interface here. So you can see in the textbook, there's all these icons for income, expense, banks, assets for the type of account, where Now, in our new account screen we're seeing in QuickBooks, we'll just select our account type from the drop-down menu. So they've actually simplified it in QuickBooks, but it looks a lot different. So that's part of the reason I like to do a video for these walkthroughs. All right. So we click the new button and it says to fill in the text boxes as shown. So you can see in the text box in the book, they've clicked on bank, but I'm going to select account type and click on bank. That's just telling it that it's a bank account. If you know accounting, you know that a bank account isn't a true account type, right? A bank account is an asset that we have. Usually, we call it a cash part of our cash asset, but nonetheless, uh, QuickBooks has that just because of the way we use bank accounts is a little different than a lot of other assets. For our account name, we're going to type checking, and then for our detail type, okay, that's what has in the textbook as tax form selection. So again, a little change here. Our opening balance, you can see when we get down to step 4 in the textbook, it wants you to go through this whole process of choosing other date, but now they've simplified. So we just put the amount of the opening balance, which was 25,000, and then a as of date, which is 12/31/2026. Step 5, we click the save button and we'll see when our chart of accounts updates here that we now have a checking account for $25,000. Now, we can't just make an asset like a bank account materialize out of thin air. So you'll see QuickBooks created, if you scroll down here, an opening balance equity account to balance that out against. Meaning, as of the date we're starting putting this in, which was 12/31/2026, we must have had some equity to account for having $25,000 in our checking account. So QuickBooks does stuff for you that if you were doing manual books the good old fashioned way, you would have to enter by hand. Anyway, so that's just something worth observing, I guess. All right. So we added $25,000. And so now we're going to add some new products and new services. So I'm scrolling down to the section entitled to add a new product and service, do the following. We're going to go back to our chart of account. Oh, we're already in our chart of accounts. We're going to click the gear icon, and then we're going to click products and services. Step 3 is we'll click add an item. And our choices, our service, and or inventory item, non-inventory item, etc. We're going to choose inventory item. Step 5 gives us the name, which is the Malibu Sunset LX. Step 6 tells us to categorize this as a boat. So we had to actually create a new category name called boat. Step 7 tells us we have one of these on hand as of 12/31/2026. So again, we're adding an asset here, and so it'll also be added to our opening balance equity, right? We can't just have a boat that materialized out of thin air. We must have had it at the beginning of when we started recording things for this business. Step 8 says it wants us to select inventory as the inventory asset account. So you have to read these very carefully, right? That's how accounting is you can't just select OK with inventory asset. It wants us to use inventory. So that's going to be the account that it's tracked under is inventory asset. The inventory asset account it's going to be tracked under is inventory. When we scroll down to sales, it says, so I'm looking now at step 9, that we're going to use the same name, Malibu Sunset LX, in the description. So whatever name we put in the sales description is what's going to show up on our invoices when we invoice our customers. Um, and it's going to have us put that same name also here in the purchase description. Again, in real life, sometimes you'll purchase something from a supplier that's under one name at the suppliers, uh, and then call it another name where you sell it. So it's trying to give you that flexibility. But honestly, in real life, most of the time we sell our products for the same name. Well, it depends on the nature of our business. So we could just copy that same name all the way through. So the name on our sales documents is Malibu Sunset LX, and on our purchasing. All right, step 10, we're going to put in our sales price, what we sell it to people for, 60,000, and what we purchase it for from our supplier, 48,000. And then step 11 is select sales as the income account. So I'm going to go to my income accounts, and I'm going to choose sales and choose cost of goods sold as the expense account. We have our taxable standard rate. And actually, QuickBooks was pretty smart to recognize that a boat might be something that has special tax considerations. Um, but if we want, we can click Edit Sales Tax. And we're going to say taxable. Let's see. We have standard rate. So this is another area where the book looks a little bit different. And we're not going to do any other categories. Okay, so that's taxable standard rate. And then in our preferred vendor down here, we're going to add a new one. And we could fill out all of this, but we're just going to fill out Malibu boats for now. In real life, whoops, not boars. They don't sell pigs, they sell boats. In real life, you might fill out all the information as well, but we're just doing Malibu boats. Hit save. They're our preferred vendor for this product. And then it only gives us the option of save in the book, but that's not an option here. So we're going to hit save and close. And we've now added, you'll see it pop up here, the Malibu Sunset LX. We have one on hand. All right. So step 13, we're going to hit new. This time we're going to do a service. We're going to call this service engine service, which is step 15. Item type is a service. We're going to make sure we have I sell this service to my customers checked, but we're not going to click I purchase this from a vendor. Right? Typically with services, it's something we perform for our customers, but there may be some times when we have, say, a third party come in and perform a service. So we would purchase it from a vendor as well. But in this case, just I sell this service to my customers. Let's see. Step 17, we're going to put engine service here in the description again. So that's what will show up on our invoice to our customers. And then step 18, the rate, $250 per unit of service. I'm assuming that's per hour, but not sure. And I want to make sure the instructions are a little confusing here. So step 19 says click the gear icon and then click chart of accounts. So type 250 in the price rate box, then click create new. I think that that's confusing. I think what we're doing here is going to our income account and we want to record this as I think we're going to create a new income account, but I think they really did that in a confusing way. So I'm going to show you how I would do this. Um, when we come over to the income account, we can click add new. Our account type will be income. And then our detail type will be service slash fee income. You see that matches up with line item or step number 22. I think the book just got confusing there. Um, and then the name we're going to call this is service revenue. And then it's not a sub account of anything, and we don't need a description. So we're going to hit save and close. So that way we were able to just add that service revenue without going all the way out of this and back to the settings. That would have caused all sorts of problems. So I'm not sure why the steps in the book did that, right? Because now they want us in step 24 to come back into this and edit it again and then add the service revenue where we could just add it from there. So it was a strange thing that they gave us. There's no purchasing involved, so we're going to hit save and close. Oh, I don't know if I clicked the edit sales tax. Sorry. Let's make sure. Sales tax. Nope, I didn't. So we're going to edit the sales tax and we're going to call this service non-taxable. And in most states, services are non-taxable. Maybe all. Don't know. Every state I've ever worked in. All right. So created our engine service. So you can see now we have the Malibu Sunset LX in there that we've created, and we have the engine service. And if we look at our chart of accounts, so I'll come back here to our chart of accounts. You'll see that we now have, oh, whoops, right here under inventory, we have an inventory of $48,000. That's that one boat that we have in inventory that that we started with, that we just added it, but that would be the boat was existing there now at the beginning of recording these transactions. And so again, that was added in with our opening balance equity, right? Because the boat can't just materialize out of nowhere. And then these instructions down below, it's easy to miss them, okay, outside of the steps, but it says following the instructions for adding a new product above, create a new product for the following. So we're going to do a Malibu Sportster LX. So I'm going to go to settings. I'm going to go to products and services. And then I'm going to create a new inventory item. And I'm going to call it the Malibu Sportster LX. Inventory item. It's another boat. Our initial quantity on hand, the book tells us, is 3 as of 12/31/2026. And our inventory asset account is going to be inventory. We're going to use the same name. So I'm just going to copy and paste to save myself a little work for sales and for purchasing. Our sales price we're going to sell to customers is 52,000, and our purchase price is 41,600. Let's see. Our income account is going to be sales. It's going to be taxable at the standard rate, which is how it's already set. Our expense account will be cost of goods sold. Our preferred vendor, Malibu Boats. Now I've got my two boats, and then we're also going to add a new type of service. And let's do a lot here, aren't they? And the service is going to be called diagnostic service. Sell it to my customer. I'm just going to copy and paste that to my description. Price for diagnostic service is $500. Our income account is service revenue. We can either scroll or we can type it until it finds it for us. And we don't purchase it from a vendor. So we'll save and close. All right. We've added 2 inventory items and 2 services. So we'll go back to our chart of accounts. We can see our inventory is up to 172,800. It's from the boats we just added. And so I think we're ready to go to adding opening balances to some of the other accounts we have. So remember the scenario here, or scenario if you're British, is that this is a business that was already existing, but we're now entering their information into QuickBooks. And it's pretty normal when you do this in real life. I've done it for lots of clients that you just go back to the beginning of the current tax year, right? We go back and say, okay, so everything we're going to set up is a as of date of the last day of the previous tax year, meaning we're recording all of the assets that they had as of that date, and plus any liabilities, and of course the equity at that time. So that's kind of what we're doing here as we do this walkthrough. Is something you would do in real life if you were doing it for your own business. Now, if you get lucky, you can sort of set up QuickBooks for somebody or for yourself from the very beginning. Then you don't have to go back and enter all of this stuff that was already there. So I'm now in the textbook. I've scrolled down to add opening balances to long-term business loans, prepaid expenses, and common stock accounts. Um, so we're in the chart of accounts, and you can see, like, if we go to any of these accounts in the chart of accounts, there's a view register feature, which means where you can enter transactions or see transactions that have been entered. So step 1 is click the view register in the action column on the long-term business loans account. So we're going to look down here. I'm going to scroll down to long-term liabilities, and you can see one is called long-term business loans. So I'm going to click view register, and you can see there's a little help if you want to read that on register basics, but there are no transactions in there right now. So we're going to click add journal entry. So this is step 2. For the date, we're going to do 12/31/2026. We'll have a 1 in the reference column. That's step 4. Step 5, our payee is Chase Bank. And we'll have to click Add Chase Bank. Step 6, we're going to change them from customer to vendor and click Save. Step 7, we're going to go to the account list and we're going to put opening balance equity. This means money that the business had as of the start date of what we're recording here in QuickBooks. Okay. Step 8, we're going to type $5,000 in the increase column. And then it says to hit tab, which will just take us to decrease. So I'm not sure why it's having us do that. And then we're going to click save. If we wanted to, we could, well, let's not do that. Let's just follow the steps for now. So let's look at step 10 and we'll go back to our chart of accounts. You can either click this gear and click chart of accounts, or you'll see there's a little shortcut back right here, back to chart of accounts. And now you'll see we have $5,000 in this loan account. So let's see. We're going to go to step 10 is we're going to go to our prepaid expenses account. And we're going to click view register. And then we're going to click add deposit. We're going to do 12/31/2026. That was step 12. Step 13, Allstate Insurance. We're going to add them. So that's step 13. We're going to change them to vendor. Step 14, hit save. We're going to select opening balance equity. So all of these accounts that have balances, we've got to post them to the opening balance equity account. And then in the increase column, so remember that a prepaid asset is just like where we've paid in advance for something like insurance in this case. So we own the rights to being insured for the next year. And so that's something of value or an asset that we have. It's a little confusing, but that's what we're doing. That's what we're adding here. And then we'll click save. We'll go back to our chart of accounts. And now step 18, we're going to view the register for the common stock account. And if it's hard for you to navigate, just take a look at how things are set up in here. The bank accounts are first, then all the other asset accounts, then the liability accounts, and then the equity accounts. And um, so our common stock account is going to be here in the equity accounts. We're going to click view register. We're going to add a journal entry. We're going to type 12/31/2026 and the date. The reference will be 2. We're going to type shareholders as our payee. We're going to call them a vendor. I know it's a little weird, but that's what we're going to call them. We're going to do opening balance equity. And we're going to do $1,000 in the increase here. We'll click save. And now we've entered all of these pre-existing assets, liabilities, and equity at the when we're going to from the beginning of the year when we're going to record things in QuickBooks. So step 27 tells us to click reports from the navigation bar. So I'm going to come over here. Here's reports. And we're going to type trial balance. Step 28. And then we're going to select step 29. We're going to do custom from the report period. I think it's easiest, guys. QuickBooks, this book is always having us do custom, but since we created all the entries in this account, if we just do all dates, it's even easier because that just shows us all transactions we've put in here. Um, anyway, but they're having us put in these dates, type 1127. So I'll do it the way the book's saying to do it. We'll do custom and then 1/1/2027 to 1/1/2027. So we're saying show us a trial balance from January 1st, 27 to January 1st, 27. We'll click run report. And you can see we have a checking account with 25,000, an inventory of 172,800, a long-term business, a prepaid expense of 15,000. Those all have debit balances, taking you back to the accounting that you had to learn. We have a long-term business loan of, we can see I made a mistake right there. That's a good thing we checked it. 5,000, but it should have been 50,000. So I made an error when I was entering it. Common stock of 1,000, and that's going to throw off our opening balance equity as well. So one of the cool things we can do here is if we find our error looking at this trial balance, I can click on it here, and it will just take me. Oh, no, it won't take me. I want it to take me. It used to take me to the straight to the chart of accounts or to the register for that. So that's interesting. So it's just taking me to another report here. Yeah, so I'm actually going to have to go back to my chart of accounts. And then go down to up in this case, to my long-term liabilities, view my register, and correct my error here. All right, add another 0. Save it. And now go back to my reports, back to my trial balance. And again, I can put in those custom dates. I'm just going to show you how using all dates will work the same. And now you can see that my trial balance here matches the one in the book. Step 31 is to save customization. And click save. So now each time I run the trial balance, it will already be set up as all dates like that, which is pretty handy. All right. I know this is getting long, but we're learning a lot about how to enter stuff in QuickBooks. So I guess that's the price we pay for, learning knowledge. All right. So to create accounts receivable and accounts payable beginning balances, we're going to go to new. And then so I've moved down into the next section. Step one is to click the new icon, and then we're going to do a new journal entry. You have to remember your journal entries back in the day, back in accounting class. We're going to do 12/31, 2026 is the date. We're going to select accounts receivable. Whoops. And we're going to debit that account $70,000. Remember, accounts receivable is an asset. So by debiting it, we're telling QuickBooks that we were owed, that's what accounts receivable means, $70,000 from our customer buyer. Our customers owed us $70,000 as of 12/31/2026. And then we can put the name of that customer over here, Refugio. Don't know what that is. We're going to just add them as a new customer. Not going to put any other information in them for them now. So we'll just hit save. Step 4, we have an account payable. So money we owe to our vendors. And it's going to be $56,000. And the vendor, Malibu Boats, who we already have in the system. And then step 5, we recognize if there's a difference between our debits and our credits, right? The debit and credit always has to balance in a journal entry. So the difference is part of our opening balance equity. And so QuickBooks assumes 14,000. That's the amount it takes to make it balance. And then we'll hit save and close. So what this journal entry is saying is that we had an asset, money owed to us, $70,000 as of 12/31/26. We had a liability, money we owed to Malibu Boats, of $56,000. And the difference, the $14,000, in this case, we had more assets than liabilities, is going to be added to our opening balance equity, or the equity we had as of 12/31/26. That's what we're, if you want to try to translate this journal entry into regular language, that's what we're telling QuickBooks by setting this up. Save and close. And we did it. So now, step 7, we're going to go back to our reports. We're going to run a trial balance. What's cool is that if we click on custom reports, because we saved the customization the last time, it'll be right there. We can just click on it. And because I used all dates, I won't have to do that, change any dates around. So now what I want to do is check and make sure that my trial balance here matches the one in the textbook. And in my case, it does. So we're in pretty good shape. So finally, we're going to, not finally, now we're going to add some equipment, and original costs and accumulated depreciation accounts. So again, we're going to go through some steps here. Again, I'm just scrolling down to the next section. But again, pay attention as you go through this, because at the end of the chapter, you're going to do a case where you have to do this for a grade, right? So pay attention to this process. So we're going to go back to the gear icon, step 1 in to create the equipment original costs and accumulated depreciation accounts. And we're going to click chart of accounts, step 2. In the chart of accounts, we'll click new. Again, we don't have the advantage, or I don't know if it's an advantage, but we don't have the picture like they had showed before. So it's slightly different. So the type of account, is fixed assets. That was step 5. Step 6, it says select fixed assets, other tools, equipment from the tax form section text box. They now are calling that detail type. Okay, so we're just going to call it fixed assets, other tools, equipment. And then we're going to name the account equipment. I know, a very original name. So that was step 7. And now we're going to hit save. Step 9, we're going to click new. It's going to be, again, there's no top thing to select asset from. That's the part that's confusing. So step 11, we're going to select equipment. Let's see. See, even I'm getting a little bit confused. So for account type, it's going to be fixed assets, and the detail type is going to be fixed assets, other tools and equipment. And this is where it's different. We're going to click make this a sub account, and then we're going to make it a sub account of the equipment account. And we're going to call it original cost. So this is the way QuickBooks sets up tracking our cost and depreciation for accounts. I have some accountant friends who don't like this. I think it works fine from my perspective as a business owner. And so in a real life situation, if you're doing this for clients, you tend to, a lot of times it's the accountant that drives the best way to do this. So this is how we're going to do it for the class. So we create another fixed asset account, and then we make it a sub account of the equipment account we just created. And we call it original cost. And then we're going to say as of 12/31. And again, this is like taking up like what in the book is steps 14, 15, 16, and 17. They've now simplified to just putting in original cost and the as of date. And then we hit save. And what you'll see is down here under our asset equipment, where is it at? Here it is. We have equipment with an original cost of, you can see how it's indented because it's a sub account of the equipment account. And so it had a cost of 40,000. So we're tracking it as 40,000 on our records. But now we're going to put it in the accumulated depreciation. So we're going to click new. We're going to call this a fixed asset. Under detail type, we're going to call it accumulated depreciation. We're going to name the account accumulated depreciation. And then we're going to make it a sub account of the equipment account. an as of date of 12/31. Whoops. And we're going to do a $10,000 opening balance. I'm going to hit save. And you can see that because it was an accumulated depreciation account, it entered that as a negative. So now you can see down here we have an asset called equipment that has an original cost subaccount of 40,000 and accumulated depreciation of 10,000, giving the asset a book value, or book value is just cost minus accumulated depreciation, of $30,000. All right, we're almost done. So I'm clicking over to the next page in the book, and we're going to close our opening balance equity and create a balance sheet. So in real life, I don't know about in real life, but uh, I'd want to see what my opening balance equity is first. So if I go down here, I can see at this point my opening balance equity is 205,800. Again, that's this amount that is sort of accumulated as I've entered in all of the assets I already had as of 12/31/2026, all the debts or liabilities that I had, and any equity like common stock that I had. So we need to close this out now to get ready to start this new year. Okay. So we're going to go step one under to close opening balance equity and create, customize, etc. We're going to go to new. We're going to do a journal entry. We're going to date the journal entry 12/31/2026. That's step two in that section. Whoa. There we go. And since I had a credit balance on my opening balance equity to close it out, I'm going to debit it. 205,800. And I'm going to close it to retained earnings. If you remember from accounting class, at the end of each fiscal period, we close our equity, our equity balances over to retained earnings. So now it'll show that at the beginning of this year, 1/1/27, that we didn't have an opening balance equity, but we had a retained earnings of 205,800. And we hit save and close. And now we'll go back to our reports. We can type balance sheet. Again, we can do custom. I'm going to go ahead. I'm just going to do all dates. Hit run report. And now you can see we have a balance sheet. And hopefully it matches what we have in the book. Assets of 312,800. Liabilities of 106,000. And total equity of 206,800. You didn't know we were going to review so much of accounting class, did you? But there it is. We can save the customization on this. And then to turn this in, all I'm going to ask you to do is go back to our report list, run a trial balance, which means click on it. And then you can export this trial balance as a PDF. And then you'll save and upload that in Canvas, and that'll let me know that you've gone through it. If your numbers don't match perfectly, you're still going to get full credit for the walkthrough, but I suggest going through and trying to fix it because you're learning so that when you go on to the case assignment where we are going to grade the numbers, that you understand what you're doing. So I know this was a big one and kind of a hard one, and if you need help, please let me know, and I will help you. Anyway. Good luck and don't be afraid to reach out. And sorry this one was so long, but it'll get easier as we go.